The USDA's Risk Management Agency made a number of changes in new federal crop insurance rules issued last November. Among those were new language for reinstating producers for timely payment issues and prevented planting coverages. Grant Ballard discussed those and other new crop insurance developments during a recent National Agricultural Law Center webinar.
Other policy changes that we've seen, I think going back to the 17 policy and 18 policies, we are seeing the policies reformed to provide broader authority for RMA to reinstate producers who have failed to pay a debt timely. In effect, the policy is being reformed to allow some equitable reinstatement of crop insurance coverage where producers have failed to pay debts that are owed. Section 2, I think in the 21 BR, had two specific policy changes. One, allowing the administrator to reinstate producers, and an additional reformation, allowing insurance providers to allow reinstatement up to 15 calendar days after a due date for payment received. So that provides some flexibility. I think these are good changes because in the past, especially with the 11 BR, the basic provisions, we had a system where a lot of producers were left without coverage due to very minor failures to make timely payments. So I think these are good changes. And I think if you represent insureds, you need to be aware of the process for administrative reinstatement of crop insurance coverage, because so many of our clients and their lenders rely on crop insurance coverage. Additional 2020 changes in the 21 BR, Section 14, there's some clarification regarding the fact that a notice of loss must be filed by the producer for an insurance provider to consider whether delayed notice impacts the ability to adjust losses. I used to really stress, and I guess I should stress again, the notice requirements in the crop insurance policy are tantamount to a successful claim process. I think that RMA basically, by amending the policy, just wanted to clarify this certain provision. We've got quite a few changes in the 21 BR for prevented planting coverage. Prevented planting coverage, for those of you who may not be aware, is provided when an insured is unable to plant a insured crop due to insurable causes of loss that affect similarly situated producers. Prevented planting seems to be every year somewhere in the country. There seem to be a lot of disputes regarding prevented planting eligibility. The 21 BR includes 3 or 4 specific changes, which I think were primarily added to the policy to provide some clarity. One revision I will briefly address is the revision to expand the nationwide 1 in 4 requirement that acreage must have been planted to a crop, insured and harvested, or if not harvested, adjusted in at least 1 out of the previous 4 crop years to retain prevented planting eligibility. Also, prevented planting provisions were amended to clarify that coverage is not going to be provided if haying or grazing a cover crop contributed to the acreage being prevented from planting. And also we've got a revision providing an exception, allowing a producer to be paid a prevented planting payment based on a crop other than the crop planted on the acreage. Again, the burden is on the insured to prove that the producer intended to plant that crop.